Considering buying a condo in South Florida in 2025, well, whether it's Fort Lauderdale or Miami, new legislation and rising costs might make or break your decision. Let me break it down for you. By the way, I'm Juan Yarusi with Compass, your South Florida realtor. Over the years, I've been helping folks just like you achieve their real estate goals here in South Florida by navigating the market successfully. And if after watching this video you still have more questions, feel free to reach out to me personally. My information is in the description below, but without further ado, let's dive in. While interest rates might seem like the big elephant in the room, there's some other things that we need to address that are really the three main factors that are having the biggest impact on the condo market in South Florida. And those are the new legislation that was passed for building safety inspections for buildings that are 30 years or older, unless they're 3 miles within the coastline, in that case, 25 years or older, the rising cost of insurance, and the rising cost of HOA. And some of these kind of tie into one another. Let me explain. See, after the unfortunate incident of the collapse of the Champlain Towers in Surfside back in 2021, there was a new Senate bill that was introduced in 2022 that required all buildings that were either 30 years or older or 25 years or older if they were within 3 miles of the coastline. The bill requires a building to undergo an inspection. Through that inspection, they determine how structurally sound the building is. Aside from that, there's also what they call a SIRS, or Structural Integrity Reserve Study report that is done. Think of it as going to your mechanic and saying, hey, I want you to check out my car, see how everything is, let me know how many miles I have left on my tires, on my radiator, my engine, etc., so I can start budgeting and saving money on the side for when the time comes, I need to go ahead and change these items. So that's essentially what the SIRS report kind of is. They'll break down the life expectancy of the pool, the roof, the garage, and see if there's anything that they need to budget for in terms of repairs. And this will help the building determine how much money they should be collecting or setting aside for these repairs in the future. And I've actually made a video that dives deeper into this subject because it's a lot of ground to cover. So I'll link it up here if you want to learn more about that. So what a lot of these condo associations have not done, because they figured out, hey, we need to build up these reserves because now it's mandated by the state, some of them have opted to pass what is called a special assessment. And what a special assessment is, basically is every owner of the building pools in together or pitches in, let's say, a designated dollar amount to cover the cost of either replacing the roof or building up the reserves or resurfacing the pool or doing repairs to the structure of the building, right? And while some buildings might have kept up with things a little bit better and maybe didn't have such a huge assessment or any at all, some have gotten hit with pretty big assessments. Now moving on to the cost of insurance. Now this applies for both single family homes and condos as well. And the cost of home insurance has gone up tremendously across the nation. But here in South Florida, we are known for having high insurance costs. And depending on what area you live in, you might be in a designated flood zone, which means you need to carry a flood insurance policy. If you have a single family home and you're financing the deal, you're gonna be required to purchase flood insurance. But if you're living in a condo, a big chunk of your monthly maintenance dues, otherwise known as your HOA fees, are allocated to the building exterior insurance. What this means is the flood and the wind insurance for the structure of the building. Again, if you're financing, your lender will also require you to carry a separate insurance policy for the unit, but that's a more manageable cost. And here's why I mentioned that some of these kind of work off each other. Remember at the beginning I mentioned the three things were the new legislation for building safety inspections, the rising cost of home insurance, and the third would be the rising cost of HOA. Well, with the rising cost of insurance, you have higher HOA premiums. That's been a big thing for the past few years. And also with the new legislation, a lot of buildings that pass these special assessments might opt to take out a loan, and instead of having you pay everything up front in a lump sum, you can essentially pay an extra on a monthly basis for X amount of years. So as an example, think they need $5,000 or $10,000 per unit to take care of some repair. They'll divide that up into a number of years and your monthly payment will increase by that amount monthly until the debt is paid. And while there are other reasons why HOAs might go up, like they decided to change the property management team, they decided to add a new convenience or service for the building, the cost of building employees has gone up, etc. The assessments and the home insurance are a bigger part of the issue. Now, as if it couldn't get any better, while there are still condos where you could purchase with a 5% down conventional loan, even as low as 3 sometimes, which are few and far in between, if the building is undergoing major structural reforms, there's major assessments, and or there's no funding for the reserves, speak to your lender because it might get tricky to get the deal done. It doesn't mean that you can't do it. It just means that you might need a different type of loan. Again, I'm not a mortgage broker, so I'd highly suggest that you consult with one. If you don't know anybody in the area and would like an introduction, I'd be happy to do so. I don't get any sort of kickback or any sort of incentive for this. It's just that over the years, I've developed relationships with local lenders that know, particularly condos, so I'd be happy to make the introduction if it helps you in any way. But essentially what it comes down to is condos will likely be in that 20% down range, and if it's a non-conforming loan, you're now looking at potentially a 25% down payment, perhaps even a bit more, depending on the condo and the situation. So it'd be best for you to speak with a lender regarding that. So those are things that you definitely want to keep in mind. So I'm sure by now you're wondering, okay, well, I get it, but what effect has that had on the market, right? Well, in Broward County, where Fort Lauderdale is located, we've seen a rise of about 67% of inventory year over year. And in Miami-Dade, the number is 47% more active inventory this year than last. Curious to note that prices have not fallen. As you can see here on the screen, the median price for condos here in Broward County increased by 1.8%. And this is with the latest available data, but I put out monthly market update reports, so you may want to stay tuned to that if you want to just keep a pulse on what's happening. So you might be asking yourself, if there's all of these negatives, why has it not reflected in the prices yet? Well, it could be because some of the most desirable buildings are the newer buildings, and some of the most desirable buildings that are older have kept up with things through the years. So why should you buy a condo in 2025? Well, maybe you shouldn't. If the building that you're considering is having issues, if it's gonna be tough for you to get financing in it, if the structural integrity reserve study doesn't look too great, and if there are major special assessments, well, just do your due diligence, tread lightly, but remember, with more inventory, you have more options. With more options, you have more negotiability. So if you're somebody that's looking for your primary residence and you end up finding the condo of your dreams with great views, an amazing location, the building's up to date, it has no issues, it has no structural faults, it has no assessments, the reserves are fully funded, those buildings are gonna rise to the top. They're gonna be the most highly sought after and desirable condo buildings. The newer buildings, the same thing applies for them. So you might even continue to see price appreciation in those, and those might continue to drive the market. And for the older buildings, there might be a situation where investors that are looking for a good deal, who are able to take on the risk and say, even if we have another assessment, I can cover the cost, I'll just get a better deal on the buy. And if the building is older and it's going through assessments, make sure you negotiate that the seller pays the assessment in full prior to closing. Do your due diligence again. Make sure you review everything that's there. Request the meeting minutes for the last 6 months. The meeting minutes are the notes that are taken during a board meeting, so you can kind of get an idea of what's going on with the building and what they're planning for upcoming months. And you might be asking yourself, who in their right mind would do that? Well, South Florida continues to be the most sought after location worldwide. We don't only have people here that are relocating from states like New York, California, where their income taxes are ridiculous and the cost of living is tremendous, but we also continue to have international investors that see this as a safe haven. So South Florida continues to be a highly desirable location. There's over 200 companies that have either decided to move or expand their presence here in South Florida, and all of that workforce and all of those high-paying jobs along with them. And listen, condos in South Florida will continue to be desirable because it's a second home for most people. So it's easier for them to lock up and leave than to lock up and leave a house behind while they're 6 months abroad, right? And in the long run, with buildings now having full reserves, I'm optimistic that funding will be easier, getting loans on buildings will be easier. So while this period does have a ton of uncertainty, and we'll continue to monitor and see what happens in the coming months, there's always opportunities out there for buyers and for sellers. If they know the building is sound and in good condition, they know they got the upper hand. So always try to negotiate the best deal for yourself. Just be aware that only those who try and get the deals get the deals. You only win when you play the game, but make sure that during your due diligence process, you go through your inspection report, the structural integrity reserve study, the financials, and again, request the meeting minutes just so you have a better understanding of what's happening with the building. If you'd like a complimentary consultation to figure out if a condo is a good fit for you, or if perhaps a townhome or a single family is a better option, my information is in the description below. I'll put a link there so you can book a time to speak with me directly, or feel free to call, text, or email me. And in the end, don't let the complexities of the market overwhelm you or hold you back. I'm Juan Yarusi, your South Florida realtor. I'm here to make sure that you enjoy real estate success here in South Florida. Thank you so much for watching. I really hope this was useful. And if you found some value in it, please consider giving me a like. And if you want to stay up to date with market trends, market updates, neighborhood tours, or even new development projects that are coming to the area, consider subscribing. I'll put a subscribe button right here. And if you'd like to enjoy another video, I'll put it right over here. Thanks again. Stay savvy, stay informed, stay ready, and I'll see you on the next one.